Our guest today has spent more than a decade building technology for industries where the work is complex, manual, and full of exceptions. He has led products across logistics, healthcare, insurance, and financial services, spent time close to the work itself, riding in trucks, standing on factory floors, and watching how operations actually run behind the process now. Today, he's the CEO and co-founder of Kye, where he's focused on helping mid-market companies find and automate operational bottlenecks with AI. Joining us today from Toronto is Caleb Gawne. Welcome to Field Notes.
Thanks, Justin. Very happy to be here.
So just for some context, Caleb and I do know each other. It's not our first time meeting. We've been friends for a long time. We've worked together. We are a happy customer of Kye. It's been awesome for us. And so it's nice to have a friend on the phone. So anyway, we'll move right along. I'll give the listeners a bit of context on the product. Kye helped our Caleb, you describe craft. Why am I going to do it? You just tell us about what the product does, and then I can maybe get into questions.
Sure. Yeah. So we created a guide to help mid-market companies identify how their business actually works today, their operations, identify and measure what the bottlenecks are, and then deploy customized agents to actually fix those bottlenecks. All that in a matter of weeks rather than in a matter of quarters. And we do that in a bit of a different way. Historically, when you get consultants, when you get vendors come in, they have to do workshops and they have to do interviews. So we believe in a strongly data-driven approach based on the reality of what your business is rather than what it should be. I'll pause there and I'm sure we'll discuss more about the problem space later.
Yeah, so I think that's probably a great segue to the first question. Right now, when I'm talking to mid-market companies, even enterprise companies for that matter, there is this kind of we know we need to use AI. So they say, we are not really sure how to, where to. We don't know. So how do you advise a company before they just start buying tools or are trying to just say, hey, run some experiments? Like really, what's the right way to think about engaging with AI? Because I think a lot of companies are still really, really just in the first inning of this.
Yeah, I think one of the first, and I guess it sounds reductively obvious, but you need to have a goal. So AI for the sake of AI is a solution in search of a problem. You need to have a clear sense of what are you hoping to accomplish in your business? Is it margin improvement? Is it the ability to scale without increasing your headcount, especially if you have rapid growth targets? Is it the speed that it introduces so that you can be more responsive than your competitors and capture more market share as a result? Depending on what you're looking for, there's very different solutions for that. So I think it's important to set some objectives and have a sense around what you want rather than just kind of throwing an AI in and assuming that it will fix all of your core metrics.
So in distribution, where we're spending all of our time, is there certain areas that you would advise to start? I know each business is different, but broadly speaking, where does one start?
Yeah, I think there are a couple areas. We see a lot of customers, especially recently, have been deploying Claude and Copilot and various chat tools. And that can work very well in businesses that are, call it very individual contributor focused. So for example, if it's a small development shop or certain legal firms where you do most of the work individually for specific customers. Where it gets challenging is things like logistics, like supply chain, where it isn't just one person involved in everything. It's actually a team of people coordinating to actually drive customer service. But the one advantage of just deploying those kind of basic chat tools is it can help build the culture. So it gets people excited. It gets people thinking about what's possible, particularly in management. It's very effective as a thought partner just for brainstorming. You shouldn't, don't let it think for you. It certainly can't do that. And you have far more context, but it is helpful as a brainstorming partner. It can be helpful for individuals to try out and build reports and tools, things that make them feel better and maybe make their day a little faster, but ultimately likely won't translate into better margins or higher customer service. And then from there, our approach, we like to, once you kind of have that buy-in and everyone's on the same page that, hey, there's a lot of potential with this technology, I think the important next steps are, well, let's sit down and think through across your entire organization, across the teams, where is the best place to deploy it for your business? And that does vary depending on the business. Some things we do see, obviously, administrative tasks are a great area. Generally, anything that you would traditionally deploy to a BPO is kind of table stakes. Those are great tasks because almost by definition, they're lower value, they're well defined. You probably already have some form of process documentation, or you've thought about how would I isolate this task as part of my larger workflow. So those are great places to start where you can get what we call quick wins. I think a lot of times there's a tendency to go straight to, oh, we're going to get an entirely new ERP or CRM that's going to replace everything we do. I strongly recommend against that. I'd very much recommend getting a few small wins under your belt just to build the organizational muscle and to, frankly, build credibility amongst the staff that, hey, this is something that's going to help everyone there, before leaping straight into, we're going to replace, all of the workflows. That's kind of the order of operations that we've seen work best.
Yeah, to play that back, because I think there's something really important in there. Is that it's establishing the culture and the buy-in right away. And maybe that's through experimentation. So it's not so much about scale the organization as a result of Claude code. It's like, get creative, get the juices flowing, and you get a rallying point around at least some of this changes happening. Because actually what I've been observing lately is that, because I like that because it's a staged approach. What I'm seeing a lot of right now, it's the absence of having to plan. It's like, hey, everybody, just go use AI, right? But there's nothing after. And what it looks like to me right now is when I'm observing companies, this looks like Excel 2.0 to me. And you're accelerating silos almost in the business where somebody's doing individual work around Claude or like LLM of choice. And they're effectively kind of doing it within their own ecosystem. It reminds me of some of the companies I've walked through that had 300 spreadsheets, all kind of individually tuned to a small team or a person. Yeah. And I'm kind of looking at this, I'm like, this looks exactly the same, if not left. That's the final order, right? It's like, it's just still more workflows happening out of the core system off to the side of your desk. Maybe it's faster and it looks cleaner, you write better. But I think that needs to be the first step in terms of transformation. That isn't transformation unto itself. That's like stage one of many of them.
Yeah, absolutely. I think in small businesses or where it's a collection of individual practitioners, maybe the whole approach of we'll give them the tools and they'll figure it out will work. But I think when you have a mid-sized or especially a large organization, you absolutely have to have some kind of organization. You have to have some kind of top-down control to really get the kinds of gains that will move P&L, that will excite customers and excite investors. I've yet to see, other than at very small organizations, a deployment of, let's just say, call it, for example, Claude, actually drive a meaningful change.
Yes.
Jury's still out. Maybe that'll change in the future. But I think it almost always, you need governance, you need coordination across teams at minimum. And simply deploying those tools with little instructions, little governance, little foresight or forethought into how the business should work and will work in 12 months isn't going to get you where you want to go.
Yeah. So being in all the industries, you've been in healthcare, transportation, insurance, others, where does everything get stuck as you're walking through businesses and doing transformation? Where's the wall here in this? Where's a big kind of hurdle or step that maybe people don't anticipate through this progression?
Yeah. I mean, I think as with most things in business, the challenges appear as you go down that path. So in the early stages, there's that getting started of, well, how do we get started in a way that is ultimately the right path? I think there's probably the majority of companies right now are still a little frozen in terms of, do I just sit around and wait for vendors to bring an ad to me? Do I deploy Claude Code? Do I bring in a consultant, someone I've maybe worked with or someone recommended? That's, I think, the first place where people get stuck. And we talked about that one. As you start deploying, there's often some quick wins through demos. So everyone just starts playing around, right? And it's exciting. You can build a tool that seems like it does everything you need in an afternoon. And it's great. And then the problem is, as you quickly realize, wait, I have to maintain this thing. And the business is constantly changing. And oh no, we need to worry about our customer security and privacy. And how do we adapt as we add new staff and new customers? And so that becomes one problem, especially for the organizations that decide to DIY. And then one challenge we're starting to see is companies that have quick wins when it comes to the big strategic bets, like truly changing your business. I think most companies aren't there yet, but the ones that are, now the real question is, in large part on the organizational side. So how do you get from, we have very collaborative, very manual process across a very large number of people to changing the nature of the work. So it's less about my staff are furiously clicking and writing emails to they're monitoring what's going on. They're interjecting when there's a really complex situation. When a new customer onboards or something changes with the market, they specify a new rule to the AI. And so that's a very fundamental shift in the nature of work. You need to change incentive structures in some cases. Your org chart needs to change. You need to even think about the right mix of staff on various teams. What's the right distribution? What's the right skill set for that new role? And I think that's starting to intimidate companies, thinking about how do we go from where we are today to this future, which from a technology standpoint, we can start to see it. And there's proof points that it works through that organizational change to make sure that A, it works, and B, along the way, the ball doesn't get dropped. So you don't have a situation where suddenly you've reallocated staff elsewhere, and for whatever reason, there's a challenge with the system and you need to bring people back in. There's a lot of nuances in that transition. And so I think with our most advanced customers, that's the thing we're really helping them work through now.
Yeah, I've been writing about this a lot lately. It is a very difficult time to be both a buyer and a seller in this space. I think it's difficult, that it's hard to, I think it's actually a great time to be a buyer, because I think we are in a place now as a buyer. I'm not so much as a buyer as a seller, but I think from the buyer's perspective is I really noticed this. And in some ways, I don't know if it's fully here. It definitely isn't at scale, but it's, AI will never be worse than it is today. So we can kind of forward forecast progression from here. And it really feels like an era where you're kind of getting the best of both worlds when you think of software, right? It's not just kind of, like custom is kind of faster now. You can do things that are a little more bespoke, especially around the edges. So you kind of get that initial, back in the on-prem purchase, which was millions of dollars and millions of years. And then you could get something, but you liked it and you kept it. But it was expensive and it was time consuming. And now you can do these things a bit quicker, but under more of a sort of a SaaS economic model, which I think from a pricing and packaging perspective was much more advantageous. But you could argue the product was not as good as a custom piece of software because you had to fit your business into the product. So we're kind of at this really nice, I think, combination of both, where it's really a buyer's market, but this is certainly fortune favors the brave moment, because it is difficult to, everything you sort of talked about is there's transformation we are going through right now, right? And we're all pioneers and we're kind of going through it for the first time. And so anyway, it's just a fascinating time to be in this business and be doing these things. And I guess, maybe to that point, it's like, okay, so you kind of called it at the beginning, and I'll say in a similar way, it's like, but AI isn't like the panacea. It's not like, in some ways AI is also in certain businesses and through certain mentalities, it's like, it's a hammer looking for a nail. It's not always the appropriate solution every single time. I find myself in this often. It's like, anytime there's a question, it's like, oh, it's AI, but it's not always the answer. So what should be automation, or what should be AI, or what should just be workflow? How do you make that distinction?
Yes, there's no hard and fast rule around that. I think the things to keep in mind, you want to minimize AI, funny enough, in the same sense that if you had a team of, name your genius scientists, Neil deGrasse Tyson, Stephen Hawking, whatever, would you rather have 100,000 of these super geniuses in an organization, or would you rather have 100,000 normal people with proper processes, role definitions, and tools? I mean, the answer is very obvious that, oh no, there's a reason we have processes and tools and having a clear definition of what things look like. And I think that has become more important than ever, because it's very easy to just throw things into AI and say, do it. But the question is that repeatable? Is that something that will work well with the rest of the organization, with the rest of the processes going on? And so more than ever, I think is getting increasingly important. So where AI comes in is to help in another number of ways. So one, obviously, if you're doing development or design, it's probably the single biggest impact it's had on the economy, I would say thus far, is by decreasing the price of software development. So certain classes of software are just easier and cheaper to do. Your developers can do more per hour. Therefore, it makes it that much easier to have better software, to have cheaper software. And that's actually, I believe, going to be the single biggest lift, more than people just throwing things into Claude. It's an extremely expensive task. I think if you have one-off things, so for example, you're trying to do some one-off data analysis, or you have a one-off question, it's excellent as just a quick brainstorming partner. So for example, me personally, I just use it where I'm going to ask a peer for something. It's kind of a useful first pass to get rid of the quote unquote stupid questions and just kind of get some initial perspective with a grain of salt. But especially when you're thinking about your business around repeatable processes, you really need to think through and try to focus on improving your processes, making sure there's clear handoffs, and using traditional automation, because that works 100% of the time. There's, I think, a balance there where everyone's sort of figuring it out. I think with Mosaic, for example, working with your team and now in Junction, it worked out to roughly a 40-40-20 split, where 40% was just pure AI gains, 40% was better automation, better software that was enabled by AI, helped with requirements gathering, helps with development, helps with testing. So kind of in these secondary ways. And then 20% is just process. As you have a better understanding of your business, of your customers, you can just be smarter about how you do things and do things in a better defined way. You think of the success of the shipping container. It's just such a simple invention of just, hey, we're going to have a really nicely defined interface, well-defined dimensions, well-defined weight. And the economic impact of that is, I think, in various studies have called it out as one of the most transformative inventions of the last 50 years. Something so simple. And so I think we can't forget that when it comes to AI, that there's still a lot to be said for doing things in predictable, repeatable ways and not just throwing everything into AI and hoping that it figures it out ad hoc.
I think people who listen to this feel relief when they hear things like that to a degree, because I think there is this fear that AI is like that. It's kind of like commoditizing everything, right? Where you don't have a business, the value is all gone. Whoever can produce the fastest. There's everywhere you look, there's a story about a company just like yours growing at 10 times the rate with 2 people. There's a lot of hyperbole in the space, to be generous, you know? And so I think it's also like, I like that it's good to hear that still one of the greatest economic impact inventions out there is a steel box. So it's a nice way that I like that. It's a great analogy in a time of virtual everything to think of probably one of the most tangible, basic, boring products ever developed.
Yeah.
Okay. So why do you think middle market companies may actually be able to move faster with AI than, say, a Fortune 500? I've heard you say this. I love this thesis. I have opinions and I can argue both sides of this one. So I'm curious as to your position on this.
Yeah, I think, longer term, there's sort of 2 prevailing narratives. One is the 2-person, $20 billion company. And there's one company is going to do absolutely everything with the help of AI. And I think, again, both of those are hyperbole and don't really reflect reality. And in fact, when you think about organizations, what's the optimal size for a community, for a tribe, for people to work together? Well, it tends to be like that 50 to 150 person range. If you're just from first principles thinking of organizing people, that's a great size where you can know everyone, you can work together, you can have diversity, but it's not so large that you feel disconnected from other people in the organization. So I think that's one of the first things, is just looking to the future. Do you want to work at that 2-person, $20 billion company, or that 100,000 person, million person company, or that kind of mid-sized organization? In a lot of ways, that's kind of a strong starting point. But in the near term, in terms of competitiveness, I think not every mid-market company will be able to make the transition. It requires risk-taking, especially now. Some of the organizations we speak to, there's this concept in venture capital of default alive or default dead. And I think a lot of organizations, especially mid-market, have been default alive, which means if you do nothing, you'll grow a couple % a year and things will just be fine. And therefore, there's no urgency to do anything. Unfortunately, it depends on the sector, but we're seeing more businesses that are actually in default dead now, where your margins are eroding. You're starting to lose some market share. Financing is harder to come by, particularly in the mid-market right now. That's a real challenge. And so if you don't have that growth anymore, it can quickly become an existential risk. And so I think there is a real window here where in the next, call it 2 to 3 years especially, there's a chance to capture market share and move faster than your peers. I think probably in 3 to 5 years, it'll level off and all the players who are left will have adopted this technology. And I don't know that there will be a major competitive advantage anymore. It could very well just level out. But right now, whoever's adopting this sooner has a real opportunity to unlock new markets, to improve their margins. And we've seen that historically with new technologies, where there's a brief window where the early adopters get a benefit, and then suddenly at some point it gets commoditized and there isn't that opportunity again. So I think there's a really important window for organizations to do that. Why mid-market? If you work with large enterprise customers, you see what we're talking about isn't just a technology deployment. There's org chart changes, there's incentive changes, and that organizational friction is very, very substantial, especially at very large companies. That's the nice thing with mid-market organizations where there's a flatter structure. If ownership wants to and strongly believes in the move, they can do so much faster, much more effectively than the largest companies in the world can. So yeah, that's, I think, the biggest advantage. And just fundamentally, the businesses tend to be simpler. The largest enterprises have a massive amount of M&A across so many regions that the complexity is just so much higher to make this kind of change. So those are a few reasons why I actually do think that a good percentage of mid-market companies have that opportunity to really capture market share and grow and become market leaders, in my view.
Yeah, so I tend to agree. I think also the technical complexity too. A mid-market company has an ERP, a WMS system, and a couple other things maybe. You can look at an enterprise that's got 10 ERPs, 15 WMS systems, and the end-to-end, and just trying to find some, so getting the data, even, getting to a place where even accessing the data in a way for a pilot or an experimentation is, like, to your point, super complex. And I think too, what really benefits this type of change in a mid-market organization is that this is less about top line growth and more about performance and customer. Like, there's probably a top line growth cascading effect here, but it's about finding margin efficiencies, because top line growth in asset heavy businesses does not necessarily scale. If you take on a new customer, there's costs to that customer. It could be they're in a new place, so we need a new warehouse or a new 3PL, or we're going to buy a bunch of inventory in anticipation of the sales. Like, there's a lot of cash to support that customer. And if that doesn't go according to plan, you're taking a risk there. And so I think what's really risk off in many ways, which is kind of ironic when we sort of think of this as like, you have to take a risk, you have to be bold. I do agree you should be bold, but it's like, if you contemplate the risks that you have to take in running the business, the distribution business, day to day, week to week, dollar for dollar, I think it feels risky, mostly because of the general lack of awareness and knowledge around the topics. So it feels riskier because it's so abstract. But if you're going to lay it out and say, look, if you're going to spend $100,000 or $1 million or whatever it is on moving this part of the business from here to here in a measurable, tangible way, and this is the ROI that you're going to, it's really difficult in many other parts of your business to get very measurable, demonstratable ROIs before you even have to deploy any real capital to do it. So I would think in many ways, the risk is in the unknown of it, but I think spending time in it and spending time in a deal cycle and working with the right people to kind of ladder into it, you'll find it can feel risky. That's kind of my call out to the market. It's not as risky as you think, because you can sort of say stop and you're not like all the way in. So yeah, I think I'll triple down on it, but I think the risk is a lot has to do with the abstract nature of this. And to your point, 3 to 5 years from now, this is not the internet of 1991. It's the internet of 2010. So people know kind of what it is. And it feels a little more just tuning the dial versus this huge leap. So that's my piece on it.
I think one of the interesting examples on the growth side is really the opportunity around faster quoting. So we see this a lot across different industries, is if you can be that much more responsive, you can capture market share where your peers can't. If you can do it both quickly and accurately. It's easy to get a quick quote. It's very hard to have one that's both quick and accurate. And so I think that's where there is a real opportunity for differentiation and a real competitive advantage in the shorter term. So that's one example where it's not just the margin savings, but the speed can unlock, new offerings. Like, one example we had was, it would take essentially, this was a bill auditing company, and it would, in some cases, take months to work through, the full historical backlog, and deploying an agent is days. So, well, that's a differentiated offering in the marketplace where you no longer have to wait. Your customer no longer has to wait so long to recognize savings. They can get them that much faster.
Yeah.
So that's just one example.
Yeah. And again, that's kind of, it's maybe we're sort of saying the same thing. To me, actually, it's almost like retention in CX, right? So it becomes this kind of like, it could be both. Net new customer comes in, has a better experience, or existing customer, which are what I recognize in the market right now. There seems to be this increased emphasis on this right now. I think customer acquisition has just gotten really expensive and really busy in most categories. And I think that really it's not like we're not doing that, but the customers that you do acquire, keeping them, expanding them, making them customers for life has quite frankly, disproportionate value to even new customer acquisition. So it's like, I think that's an area where I see a lot of opportunity for wins here. But yeah, certainly, again, it's all one begets the next, because if you create extraordinary customer experiences, and that virtue reputation grows. And then so people hear about it and they become your customers too. So extraordinary value creation, I guess, is the unlock. Okay. Rapid fire question time. I have to read them because they're too fast. I can't pretend them like in conversation like silence. What's the most dangerous assumption companies make about AI?
That it's a panacea. That's a silver bullet and will solve everything with minimal effort to deploy.
Who should own AI inside a company?
Tough question. I want to say at mid-market, CEO or COO.
Yeah. What's the fastest way to tell whether an AI initiative is actually working?
The fastest is adoption. The slightly longer version is impact, be it top line, customer engagement, the metrics that actually matter to your business specifically, not an arbitrary measure.
What's one job skill that matters more because of AI?
Management and process improvement. Management in the sense that really using AI, the people that are best with AI, and there's some studies around this, is that you need good management skills. You need to be able to decompose work. You need to be able to provide clear context and instructions, and you need to be able to identify when things aren't working. And so in a lot of ways, it's like making a lot of your individual contributors, you're promoting them to manager.
What's one thing you wish you knew about AI sooner?
Interesting question.
Yeah. I can write this.
I think just how quickly processes and people become the primary challenge or the primary bottleneck in adoption. That the technology itself on its own probably won't get you the kind of savings you want. And that very quickly, it's everything else around it that you need to start thinking about deeply and be best in class at.
I'm going to add my answer. I wish I understood sooner how commoditized workflows were going to become. And it hasn't gone there quite yet, but it's like, it's so imminent in many ways that I really probably would have thought about our business different a year ago. Now we're thinking about it again, but now we're sort of reimagining the business because I just didn't appreciate how quickly that was going to happen and how the workflow was really just the sort of the superficial app layer, basically. And there was a much deeper problem and need that was going to kind of come as a result. So where can people find you and check in on what you're doing?
Yeah, so you can find me on LinkedIn, Gawne. You can find our website at www.kye.ai. And I have a newsletter going on LinkedIn. Nobody built this for you. It's about mid-market companies adopting AI and what's working, what isn't. So please follow along. And if you're a mid-market leader, I would love to have you on, and I would love to discuss some of the challenges and opportunities that you're seeing.
Sorry, spell Kye, just so we have it all.
Yeah, it's a great point. It's KYE.
Yeah.
It was an acronym and we changed it, but KYE.ai.
Cool. Caleb, as usual, killer. Thanks to you.
Thanks so much, Justin.
Hey, man. See ya.
Take care.